Most years you get 2, 3, or even 4 30% drawdown. This one in Bitcoin has been 27%. It's kind of within the range of normality. And what you need to ask yourself is the main drivers of crypto are the business cycle, i.e. where are we with the economy? Well, we're starting to pick up slowly, inflation's coming down, rates are going to come down, liquidity is going to come in, and so therefore that's usually a very good time for crypto.
Is Bitcoin about to take off, or are we looking at another massive crash? In today's video, we'll explore what's really going on with Bitcoin, the macroeconomic factors driving it, and whether October 2024 will spark the next major bull run or bring us closer to a downturn. Stick around to find out how big players are reacting and what this means for your crypto portfolio.
So when you see a news event like the last few days, driven by macro factors, you tend to think they're likely to be short term. Now, if the business cycle was getting old and the economy was starting to feel a bit more fragile, then yes, you might be worried about it. But this is early in the cycle, and generally you have to expect the volatility. And how I've always dealt with it is a Jedi mind trick, which is you look forward to it. When it happens, you can buy more, and you get to compound your returns much better than anybody else who just does nothing or tries to trade around it.
Bitcoin is once again in the spotlight. As of today, we're witnessing the formation of new higher lows. With massive resistance just ahead, the big question is, will Bitcoin break through and start its long-awaited bull run? Or are we about to see another painful rejection? In today's analysis, we're going to break down all the critical data points, including key technical indicators, recent institutional moves, and what October has historically meant for the cryptocurrency market. Plus, there's some insider news you definitely don't want to miss. But before we dive in, let me quickly remind you that if you enjoy deep dives like this on crypto, markets, and all things macro, make sure to hit that subscribe button. Your support helps us bring in top-tier guests and provide you with valuable, up-to-date content. Now let's get into it. Bitcoin has created yet another higher low. On the harsh 4-hour time frame, we're witnessing a clear upward sloping trend with a series of higher highs and higher lows, but with each new higher low comes the test of major resistance levels. Right now, Bitcoin is heading straight toward one of the most significant levels. This level was once a strong support, but after being broken, it has now flipped into a formidable resistance zone. If Bitcoin can break above this level, we could see an explosive move toward 68,000 or beyond. But if Bitcoin gets rejected here, we could be facing another downward push, potentially testing the 158,000 level. This isn't just technical analysis though. Macro factors are at play. Let's talk about the futures gap. It's the weekend, and Bitcoin has once again formed a gap around 62,000. Historically, Bitcoin tends to fill these gaps when the markets reopen, which could lead to some serious volatility as we head into the next trading week. We've seen this play out time and time again. Just last weekend, Bitcoin hovered around the CME futures in price before making a major move, and this weekend could bring more of the same. It's these little nuances in the market that give us clues about what might happen next. But what's really going to drive the next move? Let's look at the institutional flows. Yesterday, we saw a $25 million inflow into Bitcoin's spot ETF. Whenever we see these large inflows or outflows, they tend to mark significant turning points in the market. Remember, big institutions have access to information and tools that most retail traders don't. So when they move money, it's worth paying attention. The question is, are they gearing up for a major move higher, or are they hedging against a potential crash? Let's zoom out a little and talk about October. Historically, this month has been a huge turning point for Bitcoin. Bitcoin dropped 7% in the first week of October, before staging a major rally later in the month. This year, Bitcoin has already dropped 6.5% in the first 4 days of the month. Sound familiar? It's not the first time we've seen this. And if you think back to 2021, we had a similar crash during October before Bitcoin rallied into the end of the year. But here's the kicker. October has historically been one of the most bullish months for Bitcoin during halving years, like 2024. For those new to the space, let me quickly explain the Bitcoin halving. Every 4 years, Bitcoin supply gets cut in half, meaning fewer new coins enter circulation. This reduction in supply historically leads to higher prices, as demand often outpaces supply. And guess what? We're just months away from the next halving event. If we follow the same pattern as previous halving cycles, the next few months could see a dramatic price increase. In fact, 2024 could turn out to be one of the biggest bull markets in Bitcoin's history. Now let's talk about the 4-year cycle theory. If you've been following Bitcoin for any length of time, you've probably heard about this. Historically, Bitcoin's price follows a 4-year cycle, with each cycle ending in a massive bull run. If the theory holds, the next major run-up should begin right about now. But as always, there's a caveat. While history often rhymes, it doesn't always repeat. So while the odds favor a bullish move in the coming months, there are still risks on the horizon. One of the most critical things to keep an eye on is the US election. We're just over 31 days away from the election, and historically, this event has had a huge impact on Bitcoin's price. In 2017, Bitcoin saw a massive rally following the election, and we could be set for a repeat this year. The data shows that after US elections, Bitcoin tends to go parabolic, and with the economy showing signs of improvement, interest rates expected to come down, and liquidity likely to flood back into the market, all the pieces are in place for another explosive move. But what about the rest of the crypto market? Is it just Bitcoin, or are altcoins gearing up for a big move too? Well, the data suggests we might be heading into an altcoin season. On-chain data is showing that large limit buy orders are coming in for altcoins, and Bitcoin dominance appears to be peaking. This is often a signal that investors are rotating out of Bitcoin and into altcoins, which could lead to significant gains in the coming weeks. If you'd like to see a dedicated video on why I think altcoin season is imminent, let me know in the comments. Before we wrap up, let's talk about volatility. Bitcoin has been in a major consolidation phase for nearly 220 days. That's a long time for any asset, and when you see this kind of prolonged consolidation, it usually leads to a big breakout. The longer the consolidation, the bigger the move when it finally happens. Right now, Bitcoin is trading within a bull flag pattern. If we break above the upper resistance, we could see a significant move higher. But as always, it's crucial to keep an eye on the key support levels. If Bitcoin breaks down, we could be in for another leg lower before the next rally. The last time we saw a bullish cross on this indicator, Bitcoin rallied significantly. If we get another cross in the coming weeks, it could be the confirmation we need for the next major leg up. On the Haas monthly chart, Bitcoin looks like it's gearing up for a significant move. The technical indicators are aligning, and with the US election just around the corner, we could see an explosive rally as liquidity returns to the market. So what's the bottom line? Bitcoin is at a critical juncture. We're seeing higher lows, approaching key resistance levels, and we're just weeks away from major catalysts like the US election and the Bitcoin halving. In the short term, we need to keep an eye on the 62.5K resistance level. If Bitcoin breaks above this level, we could see a run toward 68K and beyond. But if it gets rejected, we might see another pullback before the next major rally. Long-term, the fundamentals remain incredibly strong. Institutional interest is growing, on-chain data is bullish, and the 4-year cycle theory suggests that we're about to enter a new bull market. And that's it for today's update. Make sure to hit the like button if you found this analysis helpful, and subscribe for more daily updates on Bitcoin, crypto, and macro markets. Let me know in the comments what you think. Are we on the verge of a new bull market, or do you think Bitcoin has more downside ahead? Thank you for watching, and I'll see you in the next one. Peace out. If you enjoyed this video, make sure to check out our deep dive into Ethereum's Layer 2 solutions and what they mean for the future of crypto. Click here to watch that now. Also, if you're looking to make large trades without the hassle of slippage, check out Kraken's OTC service, where you can execute orders with ease. Stay safe and keep stacking.